Hello and welcome to another episode of the program. In business news, the federal government has announced a new crude oil production target of 2.5 million barrels per day, a development which experts believe will really grow the foreign exchange fortunes of the country if met. According to the latest data from the Nigeria Upstream Petroleum Regulatory Commission, Nigeria's oil output rose by 91,476 barrels per day to hit 1,426,574 barrels daily in January of 2024, when compared to the production figure of 1,335,098 barrels per day in December 2023. This is contained in a document on Nigeria's oil sector obtained from the NUPRC in Abuja on Friday. Figures from the report show that with the addition of condensate, Nigeria's oil production rose to 1.64 million barrels per day in January 2024, up from the 1.55 million barrels per day recorded in December of 2023. Now, the Chief Executive Officer of the Commission, Gbenga Komolafe, added that closing the gap between the actual oil production and the technical potential presents a window of investment opportunities for investors and a significant opportunity for Nigeria to unlock additional revenue streams, address the current foreign exchange gap, and strengthen economic resilience. Earlier, the federal government announced that about 1,068 oil and gas projects approved between 2022 and 2023, which are currently ongoing across the country, are to attract a total of $22.8 billion. Recent reports by the Economic Commission for Africa show that Africa's share of global trade remained at less than 3%, driven largely by merchandise trade in 2023. And despite progress in monetary and financial integration, member states had not met the macroeconomic convergence criteria despite progress in regional integration. Now, the report further shows that although the agreement establishing the African Continental Free Trade Area officially started on January 1, 2021, the anticipated improvement in trade between African countries has not materialized. For instance, the proportion of intra-African trade relative to worldwide trade decreased from 14.5% in 2021 to 13.7% in 2022. Now, during this period under review, the share of intra-African exports decreased from 18.22% to 17.89%, while the value of intra-African imports fell from 12.81% to 12.09%. While progress had been made in the areas of roads and ICT, advancement in rail transport and energy infrastructure had been minimal, with financing posing a significant hurdle. Speaking on the report, the ECA Director of Regional Integration and Trade Division, Stephen Karingi, says that unconstitutional changes in government across Africa, unemployment and poverty were top challenges facing the continent. We'll take a break here and return with company news. Welcome back. In company news, Airtel Africa plc says it has bought 491,861 shares from Citigroup Global Markets Limited as part of its proposed share buyback program announced last week. This information was revealed in an announcement made by the company to the Nigerian Exchange Limited (NGX), signed by Alastair Jones from Airtel Africa Investor Relation. The share buyback program, which began on March 1, is designed to return up to $100 million to shareholders over up to 12 months. The announcement highlights that the primary objective of the buyback program is to decrease the company's capital. Therefore, any shares acquired through this program will be cancelled. Airtel Africa plc says that the acquisition of ordinary shares through the buyback program will follow predetermined criteria outlined in the contract with Citi, and will also be in accordance with the general permission for share repurchase granted by its shareholders. Still on company news, Vivendi's French media company Canal Plus will publish a firm intention to buy shares of South African pay TV company MultiChoice that it does not already own by no later than April 8. This follows a ruling on Wednesday by South Africa's takeover regulations panel that required Canal Plus to immediately make a firm intention announcement because of its 35.01% shareholding in MultiChoice triggered a mandatory offer requirement when it raised its stake earlier in February. Back in February, Canal Plus, the biggest shareholder in MultiChoice, had offered to buy the rest of the company for 105 Rand per share. However, MultiChoice rejected its offer, saying it significantly undervalued the group. As the owner of Showmax, a streaming service competing with Netflix in the region, MultiChoice has tapped into Africa's rapidly growing entertainment market. Stakeholders in the industry say Canal Plus speed reflects French billionaire Yannick Bolloré's aim to capitalize on this trend, strengthening the new group's position in local content and sports. Well, it's time for another break. When we return, we'll dissect recent reports by the SEC that just 5% Nigerian adults invest in the Nigerian Stock Exchange. Stay with us. We'll return shortly. Less than 5% of adult Nigerians invest in the Nigerian capital market. That's according to the Director General of the Securities and Exchange Commission, Lamido Yuguda. The SEC DG revealed this at the inaugural investment forum of United Capital Asset Management in Lagos, themed Deepening Financial Inclusion Through Participation in Collective Investment Schemes, a collaborative approach. Meanwhile, the latest Access to Finance survey report shows that the formal financial inclusion in Nigeria had grown from 56% in 2020 to 64% in 2023. Well, despite this improvement in the financial figure, Yuguda, who was represented by the Executive Director of Operations, SEC Dayo Obisan, says the involvement of Nigerians in the capital market remains low. He also added that it had become important to look at how many customers were onboarded into the capital market. Well, as part of efforts to tackle this trend, the SEC DG says the Commission is focusing on improving the capital market and enhancing access to finance for increased financial inclusion. Well, let's discuss this further. Richard Akimoladun, an equity trader at CSL Stockbroker, is my guest on the program. Thank you for joining me, Mr. Akimoladun. So yes, the financial inclusion has grown from 56% in 2020 to 64% in 2023. But what's your take on the report by the SEC DG, that's the DG of the Securities and Exchange Commission, that less than 5% of Nigerian adults invest in the Nigerian Stock Exchange, primarily due to low financial inclusion?
Good afternoon. Thank you for having me on your program. I guess the SEC DG is very right, because they have access to, they are the regulators of the market, of the equity market, and they have access to data as per the number of investors that are actually in the capital market as at the moment. That data has been around for a while. The 5%, the number of accounts in CSS as at the last time that figure was being bounded around was around 5 million or so. But we've seen an improvement in the participation of young investors in the market due to the advent of a lot of improvement in technology, that a lot of houses now has an app through which you can actually access the market. So we have a lot of apps now that you can actually access the market on your mobile phone, and a lot of young investors are actually embracing that And there's a lot of conversation that are going on around that. We are beginning to see traction, new set of investors, young investors coming to the capital market, to the equity market, to actually participate in the markets.
Access to it has been improved. But then as a stockbroker, what factors do you think are considered as risks for prospective investors which have proved difficult to navigate?
Well, things are quite easy now compared to what we used to have before. As I've said, at the comfort of your room or anywhere you are, you can actually set up an account and start having access to the Nigerian capital market to trade equity. But the major red line that investors need to watch out for is that you need to be conversant with what you are buying, the stock you are buying. You need to become know what the company you are buying into, that the business model, their business model is actually working for them, and they are making money with that business model. So you can't invest in any telco and you don't make money, because a lot of us we buy that data on a daily basis, and so you need to understand the company you are buying into, so that you don't get your finger burns as you come into the capital market to invest.
Right now, how does a newcomer, for instance, identify what stocks to invest in that will yield returns? We've discussed the red flag, even though we're going to elaborate on that later on. But then, what stocks, how does one identify the stocks to invest in that will yield returns?
So the best way to go around it is, a majority of these stockbroking houses, what they do is that they have a research unit, and they dish out their research report on a weekly, monthly basis, as the case may be. So you need to actually be conversant with those research reports. They write report on these listed companies, and they give their buy, sell, and hold recommendation. So I think that's a good place to start. So you should just read those research reports and actually familiarize yourself with whatever those companies are doing and their numbers before you can actually invest. Another way is to look at the market leaders in each sectors. I think you can actually you can not get it wrong. So when you look at the cement, you want to talk about Dangote Cement. The telco, you want to talk about MTN. So in the banking, you talk about the GT, the Zenith. So you look at market leaders in those sectors, and you can actually start your investment from that point.
All right, let's go back to the statement by the SEC DG. According to him, it has become important to look at how many customers are, or how customers are onboarded into the capital market. Now, what challenges would you say are involved in the process of onboarding a prospective stock investor?
So, as I've said, that now things are very easy, especially for the millennials, for Gen Z. The things are easy now. You can upload what is required to set up an account is your KYC, means of identification, your utility bills, and fill just a couple of forms, just simple forms to complete. And all this you can do at the comfort of your home, on your phone, on your laptop, anywhere you find yourself. You can do all these and set your account up. So the process is now becoming more easier to actually access compared to in those days that you have to go through the paper form, visit an office, pick a form to fill and complete and the like. But that's not the case any longer. The only issue with the capital market is the dividend, the unclaimed dividend that are piling up in the capital market. That's the only dividend, and the regulators are working hard to actually resolve that, so that the unclaimed dividend can be reduced drastically, and an investor can have access to their money.
All right, now, finally, a vital necessity for investing in stocks is obviously enlightenment. A lot of people are not enlightened, even though we have phones to access the stock market and do what we can on our phones for ease of business. But then, what are the red flags that a potential investor should look out for? I know you mentioned that initially, but let's create a broader picture, what are the red flags that a potential investor should look out for before investing, especially for somebody who hasn't done so before?
So I think red flag to look out for is because what I'm seeing lately is that you see some companies that are not actually making enough revenue, or their bottom line is negative. You see investors still buying into these names because the stock is cheap and they can do 10% within 2 days or a week. An investor, they want to make quick gain from these names. But you should be wary of, you check the numbers, the revenue, what is the revenue like of this company? What is their bottom line? Are they actually making money from the business they claim they are doing? So that's it, because if a company is not making money from the business they are doing, it will be difficult for you to actually make money from such a company.
Well, I'm sure prospective stock investors have learned a thing or two from this episode of the program. Thank you very much for joining us, Richard Akimoladun, equity trader at CSL Stock Broker. Well, that's it on this episode of the program. Thank you very much for watching. See you next time.